Welcome back. It's really a day that is confusing at best. You know, the market is under pressure. There are pockets that are doing well, which is autos. There are pockets that are getting hit very hard, which is banks. So lots to talk about. But let's talk about the good pockets now. Maruti posted a good set of Q3 earnings. Revenues and profits came in above street estimates. And the company has also clocked in a second consecutive quarter of margins above 9%. Shashank Srivastava, the Senior Executive Director, Marketing and Sales at Maruti, joins us now to talk about that. Mr. Srivastava, good morning and always great speaking to you on the channel. First, on the margins itself, 2 quarters of 9% plus growth. Do you think there is more scope to improve margins in Q4 and in FY24?
Yeah, it all depends on the material cost movement, because one of the big reasons why Q3 profits are good was also because material costs that came down dramatically. So I think it all depends on that direction. Of course, we are looking at good volumes also from Q4, although we are slightly constrained because of the semiconductor issue. But we hope to sell a larger portion of the higher value products in this quarter as well.
In fact, you lost about 46,000 units of production in Q3 because of supply issues. Has that eased out now completely?
Yes,
what production level are you operating at? Sorry, sir? Yes, we can hear you. I was asking you about the production loss that you saw in Q3 to the tune of 46,000 units. Has that eased out entirely? And what is the expectation in terms of production levels now? When can we expect normalization? And what would this mean for volumes in Q4?
Actually, the problem still persists. And yes, we lost 46,500 in Q3. There seems to be expectation of some losses in Q4 as well. So it's not normal. And I think the problem is going to persist for some more time. It has improved, as you would have seen in the overall numbers, both in Maruti Suzuki as well as the industry.
All right. So, you know, discounting was still high in the past quarter. How are discounting trends going ahead now?
So it really depends on the model-wise availability. I have said that earlier, discounts being a function of the gap between supply and demand. There are some products where the supply is pretty good, especially the 1 liter models that we have. And that is where you have seen the most discounting. But obviously, there are other models where, because of constraints of production, we have not been able to go full out in the market. And as a result, the availability is much lower. And that's the reason why, while there is discounting on some models, you see our overall order book is now 400 and is back to 407,000 levels today, which is pretty high and largely in models where we are not able to supply. Of course, our new launches of Fronx and Jimny have added to those pending bookings.
What's been the response there? The Jimny in particular, caught my eye. Looking pretty cool, I think so. But what's been the initial response to the Fronx as well as the Jimny? If you could give us a couple of numbers.
Yes. Actually, both are cool. The Fronx is cool in its own way, as also the Jimny. Jimny bookings are around 12,000 now, and the Fronx bookings just about 4,500. So both the responses have been pretty good, considering that you still have about 3 months to go before the start of sale happens for these two models.
Okay, well, the auto market has spoiled us consumers for choice, right? I mean, there's so much out there. It's pretty much flooded. So all the best for you as well, because I know you have a full year full of launches. What does this mean in terms of growth? What is the industry growth that you're looking at for the full year now that supply side issues are easing? And for FY24, what's the realistic growth that one can pencil in? And where does Maruti feature in that?
So if you see the current year, which is 22-23, this financial year, the industry should be somewhere between 3.85 million to 3.9 million. We have in the first 3 quarters, the industry has done about 2.9 million. And the expectation is around 1 million units in Q4. So 3.85 to 3.9 million. That's actually going to be a very healthy growth over last year. But last year was only 3.07 million. And the next year is a little bit tough to predict, considering that there are some headwinds. However, there are projections within the industry ranging from a zero growth to growth as high as 7.5%. And as far as Maruti Suzuki is concerned, our estimates are slightly on the more optimistic side. And we are looking at industry next year of around 4.05 to 4.12 million, which means a growth of roughly between 5.5% to 7.5%.
Oh, that's 5.5% to 7.5% is the growth you're looking at for the industry. That's low single digit. You don't think
Yes,
you'll get to double digit growth?
It looks very unlikely because this year is actually a very high base year. It's the highest ever that you will get to. It is about 3.85 to 3.9 million, as I said. So that's going to be very difficult.
Okay, got that. So you're saying 3.9 million, and now it's going to rise to about 4.05 to 4.2 million in FY24. 4.12 million in FY24, which is a growth of around 5.7 to 6%. Got that?
Correct.
Got that. Okay. Now, the big question really for Maruti is, will they be able to get back the market share, right? I mean, you did mention that 45% is the overall market share looking at by the end of FY24. But particularly, I want to know in the SUV side, which are the white spaces or the gaps in the UV portfolio that you would look to tap next year in order to reach this 45% overall share?
Yeah, Sonia, I think you always get to that central and core issue, and that's great because, the SUV market share is where we see an overall weakness in Maruti Suzuki. Our non-SUV market share, 65% plus, that's huge. But in the SUV sector, our market share is around 11%. And with these two models that we have brought in, the Jimny as well as the Fronx, we have announced that we should be market leaders in SUV also by the time it is in the next financial year. So that means that we are looking at very large volumes, not only from the existing Brezza and the Grand Vitara, whose full year volume should help us in the next year, but also the Fronx and the Jimny, which should add largely to our volumes. So with these two models in our portfolio, the next year, Maruti Suzuki should be number one in SUV space as well. And our market share, therefore, should go up in the SUV space from about 11% to a much higher number. And I'm not going to tell you that higher number. And overall, therefore, our market share should also rise. It is all subject, obviously, to the how we can handle our supply side issues.
Okay, all right. Mr. Srivastava, the near-term trigger will be the RDE norms coming into effect, April 2023. Couple of questions here. How much does the cost go up by? Point number one. Second factor is, will you have to discontinue any model?
No, we will not be discontinuing any model, and we will have the meeting all the RD norms. Also remember that the preparation for this thing has already happened. So in many models, the countermeasures to meet the RD norms have already been taken. And that's also been partly reflected in the price hikes that we have had in the month of January. We just last week, we had an increase in prices. So it's already built in a large extent. And to your question as to how much would be the increase in the prices purely because of the RD effect, that varies from model to model, of course, depending on the technology that's being used. But one thing I can say is that for the diesel vehicles, that's going to be a huge increase as far as the input cost for meeting RD norms is concerned. For the gasoline vehicles, it's a lot less. So fortunately for Maruti Suzuki, the impact on the RD thing will be there, but not as high in the cost as for our competitors who have a significant portion of diesel vehicles.
All right, got that. One final question then. Suzuki Motors has put out a big forecast of launching a slew of, green energy cars in 2025. By 2030, actually, they're looking at 6 EVs in India. Tell us a little bit about what the plans could be from Maruti's end, in the sense how do you plan to roll this out in India? What would the near-term targets look like?
Yeah, so I think what has been said, and of course we are still looking at the document. Yesterday it was released, and yesterday, as you know, was a holiday for the Republic Day in India. But yes, we will have 6 EVs by 2030. And as we have been saying, that the adoption of EV will gradually increase. The the inflection point coming a little later. And therefore, we have accordingly planned not only to meet the CAFE emission norms, which the fourth norms be coming in the CAFE 3 coming in 27, 28. So it's in response to that and the market changes that these 6 EVs have been planned for 2030. By the way, our projections for 2030 for Indian passenger vehicles is quite high. It's about 6 million. So a significant portion obviously would be for Maruti Suzuki.
Yeah, all right. Thank you very much, Mr. Srivastav. Good luck to you, to the company, and hope you keep doing better. Thank you very much for joining us here on CNBC TV 18. Well, that is Maruti.